I can safely say I've made a lot of mistakes. And if I would have consulted you before doing some of those, I probably would have saved a lot of frustration and money. But I think that's the purpose of having a CPA, to ask some of those questions on the front end. Yeah, makes sense. And I'm curious, Harris, from your perspective, I work with a lot of folks who have higher W-2s, and they're always trying to figure out ways to leverage those tax strategies to the best of their abilities. And I know there's some limitations for folks on the W-2 side. What tax strategies do you recommend for folks who have a higher W-2?
That's a great question too, because they do have income phase outs for losses in real estate. For example, you cannot write off your real estate loss if you make over $150,000 of income. So when people say, hey, real estate's great, I get to write off everything and not pay taxes, that's not necessarily true. So for a person that has that big W-2 and has that rental property with losses, that's great. And you might have lost, 6 figures, let's say, for example. Well, you can't offset it today. However, those losses are suspended and carried forward to potentially, when you sell the property, that's when you can get that money back. So,
Harris, curious, when people end up putting their deed into an LLC, I see a lot of folks who say you need to do it in certain states. Some people say Tennessee or Delaware or like Nevada. Other people just say do it in the state that the property exists. What do you recommend from a tax perspective?
That's a good question. You have a lot of awareness about Delaware being a great state to start a company for certain advantages. Now, that's not necessarily true for the majority of the U.S. Now, you should put the LLC in the same state that the property exists in. That's how it should be done. Now, to address the Delaware concern or thought, it's really for larger C corporations for privacy. In Delaware, you do not have to disclose who the owners are. And that's really the main reason to do that. So I think, coming back to that question, put the LLC wherever the state of the property is located in.
Makes sense. Harris, let me ask you, I think a lot of folks right now are seeing the potential with doing partner deals. Maybe if they're short on money, but they have a lot of time. But there's also a lot of people trying to do seller financing deals, especially with interest rates right now being about 8% for investment properties. If they can get into a property that has subject to financing or try to assume the loan and get that loan for 2 or 3%, it's very attractive. So from your perspective, for doing partner or seller financing deals, what are some things that folks should be considering and maybe some things that folks should avoid altogether?
Sure. So I think if you're doing a seller financing deal, that's great, but be very careful that you can get paid, right? The whole point of it is because the buyer cannot get financing themselves. You're assuming the risk with a profit margin on that rate to make. So just run credibility checks in any way possible to prevent any defaults. That's just a headache to go through. Be very careful when doing that due diligence.
Now, on the other side, so say I'm the buyer trying to go after a seller financing opportunity where it makes sense for me. Any advice for how to best structure this? Or should I just, anytime I see that opportunity for seller financing, just immediately go get it?
I think that it's important to reach out to your CPA when this comes up, because there's a lot of numbers to run and they constantly change. So although your seller financing deal might look good today, what does it look like tomorrow when the rate hike goes up or down? It's just hard to pinpoint right now. I think with our larger, higher net worth clients, a lot of them are cash. They're holding cash, waiting for a recession or prices to come down where cap rates are reasonable. Cap rates right now we're seeing are 4 to 5%. I think reasonable 7, 8%. And I would forecast maybe 15, 20 months from now. Now, I know that's not a positive outlook for right now, but that's just what we see as our experience. A lot of opportunities coming up. And I think that possibly wait.
Yeah, makes sense. Harris, let me ask you, I know you work with a lot of ultra high net worth clients and just high net worth clients in general. What would you say, where are they investing their money nowadays and why do you think they're doing that?
Right now, we see a pullback from real estate, and that's really because the prices are a little high. Now, Obviously we're all in the real estate market looking at it every day. Prices are coming down, and the big guys know that. So they are pooling together money in any way they can, keeping it cash, keeping it ready to pull the trigger when it's time. So right now is not the time, but potentially in 6 months, a year from now, it is. And the name of the game is bigger deals. So if you have friends, family that are ready, align your goals, prepare for a better future than today, and just get ready.
I can safely say I've made a lot of mistakes. And if I would have consulted you before doing some of those, I probably would have saved a lot of frustration and money. But I think that's the purpose of having a CPA, to ask them those questions on the front end. And I'm just curious from your perspective, like there's a lot of people who are going to be watching this that have higher W-2s. They might have a house they live in personally. Do you think it makes sense for them to work with a CPA at this point as well?
Absolutely. Just because, not only for property, but potentially that CPA can save them a lot of money elsewhere. We didn't talk about this yet, but I think retirement savings plans, HSAs, IRAs, 401ks, people should be using them when they aren't. HSAs are great. There's no self-employment taxes on that. 401ks are still good, but you are paying FICA. It's just so many different variables and things to look at that maybe you're not. And to have an extra pair of eyes that's educated to look over your shoulders is definitely helpful.
Harris, we've asked so many questions at this point, and there's so much insight. This is a very, very dense interview. So really excited to post this on YouTube, Instagram, everywhere else. Where can folks find you, and how can they start working with you today?
I think they can find me on Instagram. They can find me on our website and Google. If you just Google more CPAs, we're there. We've got plenty of reviews for you to read how we work. Greg can probably vouch for us as well, hopefully. And I'd love to work with any of the representatives or viewers today. Feel free to shoot me an email or call. I'll personally touch base and we can just have a chat.
Harris, thank you so much. And for anyone watching, I may have mentioned this earlier, I've worked with Harris for a few years now. I've referred probably dozens of people to him. I really consider him and his firm a valued member of my team to get to that next level. And I think having a CPA like Harris who can shoot you straight and making sure that you have the good news at certain times and then give you the bad news and challenge you to be better, I think that's what you want in a CPA. So for anyone watching, I hope you found this to be beneficial. Make sure you follow Harris as more CPAs online. We're going to drop all this information in the bio here too. But thank you for joining us today. And if you have any questions, feel free to reach out. Thanks, guys.
Thank you so much, Greg. Have a good one.